Welcome to Bears in Exile. Today is Monday, October the 8th, and this is the market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and GE, and a few others. I'm just going to get right into it. So, kind of a interesting day. At its lowest today, we would have got a downtick on the Dow, but the dip was bought, and still not a bad day down. 26.5 points, decent, but holding above the major price consensus level for October. So, a little bit of a letdown there for the Bears, but it's not the end of the world. Beyond that, we have a very slight tick up on the 14-day RSI moving average once again. We have momentum failing in the stochastics, in the CCI, in the RSI, in the MACD, and almost in the MACD histogram. So, is today enough to switch it to a downward trajectory? Certainly helps, but is it completely ready for that? Not in the daily. Daily just becomes questionable, whereas it was looking strong on Friday. It is now pretty questionable, but it's definitely its fate is not sealed. And if we look at this 60-minute time frame, you can see right here at the open, boom, really nasty. Dip was bought. Faded out a little bit by the end of the day, but beyond that, what can we see? We can see the 14-day RSI moving average turning in the 60-minute time frame. Great. You can see the stochastic stalling out, CCI down, RSI down, MACD down, and MACD histogram sideways. So 60-minute time frame could have a secondary reset. Wouldn't be surprised. But yeah, it has a pretty good alignment for further downside. Kind of just funny to me how the daily, during all this time we were talking about secondary reset, and you know, getting closer, but not yet. And now we're starting to see the very first inklings of that completing on the daily. So, anyways, just thought that was funny. And looking at SPX, notice how on SPX we do have a downtick. Excellent. And we did close below the major price consensus level. This is a totally different beast than the Dow. This one actually does look strongly negative on the daily, unlike the Dow, which is just questionable. We have the 14-day RSI moving average moving on down, stochastics turning to move with it, CCI going down, RSI going down, histogram barely down, and the MACD also barely down, which we were looking for that. We said that on Friday. We'd be looking for this to crap out before hitting the, not Friday, we released it on Sunday, before hitting the target line on the MACD. So, very cool. All the while staying inside this channel, and now going back right smack dab to the middle of it. That downtick target gives us a level of 1451. Yep. 4 points down from where it is now. That's nice to have. And since it's so different than the Dow, 60-minute time frame, is it any different? I can see the initial drop go right to the halfway mark. It was pierced, wasn't beaten, and backed away. So very nice. First resistance failed, so or wasn't beaten. Sorry, just not talking very well today. Beyond that, Could we have a secondary reset in the 60-minute time frame? Yes, that is similar to the Dow 14-day RSI moving average moving on down. So ultimately, that should win. Win. I have a frog in my throat today. Ugh. So anyways, ultimately negative, could have a little bit of a positive move before that point, but nonetheless the daily looks poor for SPX. That's the most important part. Going on to the VIX. Very nice. We're talking about how coming into an area of support. I certainly didn't expect it to jump, that much instantly, but that is what it did. And look where it went. It went right back to the long-term moving average bar. Got a little bit of penetration and fell back, but still very encouraging, and not trying to gap through it or, into it. So that is positive. Also staying above the major price consensus level for this month. We're actually getting back above it, I should say. Also positive. And what else do we have? Well, look at that. MACD jumping right before it could get a bearish cross. Up on the MACD histogram, up on the CCI, up on the RSI, up on the stochastics, and barely down on the 14-day RSI moving average. Very nice. Trying to clear that blip in the heat map. This does look positive, except it is coming into resistance. So, not a bad showing at all. Going on to TNA, small caps. Notice how that looks different than the Dow as well. We're looking at this as a potential rising wedge along with the Dow, along with SPX last week. Today, Friday kind of jacked it up. That shouldn't, it's not healthy. But today getting back inside of that and closing below the major price consensus level. It's a doji star, and seems like it's time for it to, continue sitting on the long-term moving average bar and hopefully penetrate into it. 14-day RSI moving average moving down, stochastics moving down, CCI, RSI down, histogram down, MACD down. This is very definitely bearish in the daily time frame, absolutely. So, although this hasn't taken very much damage yet, I think there's a very good chance that finally we're going to get some compression. And UUP, the dollar. Red candle today, but it did gap up. It would have been awesome if it had been a green candle, but simply wasn't. 14-day RSI moving average moving up, and secondary reset almost done. We have a cross of the fast stochastic, and up on the CCI, sideways on the RSI, sideways on the MACD, histogram, and up barely on the MACD. Not as strong, certainly not as strong as I would like to see, but it doesn't look bad. So, and if you look at this from a pivot standpoint, we should have a lower high pivot from Friday, which does free it up to make a new recent higher high. Odds are good that it'll be able to do that. So that is encouraging as well. And JP Morgan, most important bank. We were seeing weakness in this on the weekend video, and it was able to close slightly lower, even though it was a green day. Fat bodies being top. Secondary reset on this is not complete. Stochastics are not pointing down. They've not crossed the 14-day RSI moving average. Some of these other things do look toppy, CCI, RSI, etc., etc., but simply don't have a good trigger point yet. Might show up tomorrow. Just doesn't look as nice as it should yet. Too bad. And XLF showing even more weakness over the weekend video than JP Morgan. And today doing exactly the same thing as JP Morgan, not being weaker, unfortunately. So just waiting for a better trigger point with the stochastics rolling over. But yeah, too bad there's not a little more development there, but there isn't. And CompQ the NASDAQ. Look at that. Now we didn't know if we could really trust this ascending wedge or not. This is not really, you know, gorgeous or anything. It has this messy candle here. And if it's true, this is very bearish what happened today, with the closing below the major price consensus level, falling out of the wedge, and everything pointing down. Certainly it looks bearish. Wedge or not, this is very bearish. So crashing right back into the major price consensus level, I'm sorry, into the long-term moving average bar. That looks bad. It just does. And Apple. I don't know why this is having such a hard time. I mean, yeah, they have the news about the strike at Foxconn. It doesn't seem to be a really big deal, but Apple's sure taking a beating at the moment. Everything is pointing down. Nothing to look at there. You do have a blip in the heat map suggesting that there is a short-term bottom here or sometime soon, but it's not at a place where it can really be caught. As a matter of fact, I'm going to show. And there's a little area at 630 and a better area at 620. And then a really, really good area here at about 605. So at least there's a couple of places for it to get caught. But yeah, it's not... there's not obvious places for it to be grabbed, unless you're looking at where all the buying was before. Definitely bearish. What can you say? All those points are below where it is now, and that's all there is to it. And GE. Now this one is the best chart for me for the whole day, because while everything else, you know, looks good, it's finishing its alignment, waiting for you know, something or other to roll over. This is the best tell, GE. And just like over the weekend and the videos before that, we were waiting for a downtick. Today it happened. Excellent. It's not a huge downtick. Takes it to 26.65. But 30 cents down on GE is definitely something. Definitely in the topping area in the heat map for some very long period of time. And we finally have rollovers of CCI, stochastics, RSI, MACD histogram, just waiting on the 14-day RSI moving average. This sucker is just prime, and now we have finally a downtick. So it's only worth 30 cents, but is that enough to get the ball rolling on some other things, namely the Dow? It's possible. It's possible. And am I missing anything? I don't think I am. Oh, gold. Yeah. Not exactly a fun one. Had a downtick on Friday, and it was met. Nope, it was not met today. It was almost met today. Missing it just by a few cents. Yeah, by about 10 cents. So beyond that, everything is clicking down. MACD histogram, MACD, RSI, CCI, stochastics, 14-day RSI moving average. This one's going to do it. Absolutely. Another 10 cents. Totally bearish looking. And I guess that's it. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.